Imagine waking up one morning to discover that the money in your bank account, every dollar you thought you owned, wasn't just created somewhere, but created by someone, and that someone has quietly moved operations underground. Not criminal gangs, not rogue nations, but the very institutions that claim to protect the economy, because after the last major financial crisis, money creation didn't just continue, it vanished from public view, slipping behind closed doors and sealed meeting rooms. The process that once operated through semi-transparent mechanisms is now carried out in a shadowed world of emergency facilities, overnight operations, hidden liquidity injections, and private bargaining between the same institutions the crisis exposed. Why? What changed? And what does this shift reveal about the true structure of modern money? Today, we're pulling back that curtain. To understand why money creation disappeared into the shadows, we have to rewind to a time before financial jargon took over. Back when the idea of creating money meant simply printing bills. The system was physical, visible, tangible. But over time, central banks realized something. Real power isn't in printing money. Real power is in controlling credit. And once money became digital it became a series of promises issued by private banks. The entire process moved one step further from public understanding. Then came the event that changed everything, the global financial crisis. It didn't just shake markets. It exposed how fragile, interconnected, and artificially supported the entire monetary system had become. Central banks panicked. Governments panicked. The financial sector panicked. But what they did next would redefine modern money creation and bury the entire process behind shadows, because transparency, as they discovered, was now a liability. Decades ago, money creation was relatively straightforward. Banks issued loans, central banks supplied reserves, and everything was documented through public statements and standard reports. The Federal Reserve published routine data with almost boring predictability. European central banks followed systematic rules. Japan and others experimented cautiously, but documented every step. There were debates, criticisms, and mistakes, but the architecture was visible. Then, through the 1980s and 1990s, the system evolved. Financial markets grew faster than regulations. Derivatives multiplied leverage. Banks created credit more aggressively global. Capital flows made national policies weaker, and shadow banking began quietly replacing traditional banking. This new ecosystem was built on one assumption: if liquidity kept flowing, nothing would collapse. That held until 2007. Throughout the early 2000s, credit ballooned. Mortgage-backed securities became private money. Repo markets created invisible leverage. Offshore financial centers fueled cross-border liquidity. Too big to fail institutions grew even bigger. Central banks encouraged lending by keeping rates low. The illusion of stability fed the machine. Banks issued riskier loans. Shadow lenders issued even riskier ones. Investors trusted ratings that no longer reflected reality. Credit wasn't just expanding, it was multiplying. The system became so leveraged that the entire global economy was effectively running on invisible promises, not actual money. And then those promises started breaking. When the first cracks appeared, subprime mortgages failing in the U.S., officials insisted everything was contained. But behind the scenes, interbank trust evaporated. Institutions stopped lending to each other. Credit froze, and the entire system began collapsing in slow motion. For the first time, the public witnessed central banks stepping in as emergency lenders of last resort. Not just two banks, but two investment firms, insurance companies, and even foreign financial institutions. The Federal Reserve opened previously unknown liquidity facilities. The European Central Bank created unlimited lending programs. Japan and China intervened to stabilize global flows. Money creation skyrocketed, not gradually, violently. And to prevent total public panic, central banks initially insisted these actions were temporary, limited, and fully documented. But once the crisis dust settled, something unexpected happened. Instead of reverting to normal, central banks kept many of these emergency tools open. Quietly, the crisis had given them something they didn't have before: permission to create money in ways the public no longer understood. And that set the stage for a permanent shift. After the crisis, Politicians demanded accountability, but not too much. Financial systems needed stability, not scandal. Banks had to rebuild trust, but not reveal their leverage. Governments needed low interest rates, but not public debate. Central banks needed flexibility, but not scrutiny. So the system evolved again. 1. Money creation moved into off-balance sheet facilities instead of simple reserve expansions. Central banks created lending programs hidden inside temporary vehicles. 2. Repo markets became the new money spigot. Daily trillions exchanged hands, invisible to most economic observers. 3. Temporary programs became permanent tools. Facilities designed for crisis use became everyday instruments. 4. Reporting became more complex instead of simple data. Central banks released labyrinth-like documentation, impossible for known experts to decode. 5. Private markets replaced public ones. Foreign exchange swaps, collateral rehypothecation, and offshored liquidity became the real engines of credit creation. This wasn't accidental. Transparency risked revealing that modern economies could not function without constant monetary support. So, money creation moved into the shadows not to hide corruption, but to protect confidence. Because once people understand how the system truly works, the illusion breaks. After the crisis, regulators tried to restore stability. Basel III imposed new bank capital rules. Governments created oversight committees, stress tests, attempted transparency. Central banks promised gradual normalization. Economists insisted problems were solved, but these fixes couldn't address the deeper truth. The modern financial system requires continuous artificial support far more than before the crisis, which is why attempts to unwind these programs repeatedly failed. In 2013, a minor suggestion of tightening triggered the taper tantrum. In 2018, balance sheet reduction caused markets to crash. In 2019, repo markets imploded, forcing secretive liquidity injections. In 2020, global markets collapsed again, requiring unprecedented money creation. Every attempt to return to transparency caused instability. The system had become dependent on darkness. What's happening today mirrors the pre-crisis era, but amplified. 1. Global debt is now over $300 trillion more than triple pre-crisis levels. 2. Shadow banking has grown larger than the world's GDP system with no public oversight. 3. Central banks have created over $40 trillion in liquidity since 2008, most through channels the public cannot track. 4. Private credit funds now create money-like instruments with less regulation than banks. 5. Repo markets move over $12 trillion daily, almost entirely unseen by the public. The pattern is unmistakable. When the financial system becomes too fragile to survive sunlight, it retreats into the dark. And that's exactly what happened. Modern money is no longer created by printing it. It's created by credit through systems so complex they operate outside public view. The last crisis exposed vulnerabilities so deep that central banks chose secrecy over transparency to maintain trust in the system. If the public truly understood how dependent the global economy is on hidden liquidity, confidence could collapse overnight. Every financial system in history has relied on belief. Once belief cracks, collapse follows. And when money creation moves into the shadows, it doesn't disappear. It simply becomes harder to control. The next crisis may not begin in public markets. It may begin in the hidden world where money now truly lives. If you want more deep dives into the hidden mechanics of global finance, how debt, money, and power intersect, make sure to like this video, subscribe, and turn on notifications, because the shadow financial system isn't going away. And the only way to understand the future is to uncover what's been hidden in the past.